This program is brought to you by Connie Dodo of Connie Dodo Realty Group, 119 Pleasant Street, Methuen. When you want results, don't make a move without us.
Welcome to the Dodo Real Estate View. I want to thank our viewers for the topics that you have suggested to us to present on our show, as well as the questions that you have presented about real estate. Today we're going to be talking about mortgages, and we have James Khoury here from New Fed Mortgage. Tell us about your company, James. You're located in Methuen.
Yeah, sure. Our company was formed in 2001. And they have a huge presence on the North Shore and South Shore, and we're proud to say since August of this year, we now have a Methuen branch located at 219A Broadway.
Yeah, which is great. I've done mortgages with James. He really gets to the nuts and bolts of certain loans that people need to have and really get to that. I mean, you talked about New Fed. I mean, so they're more prominent. Well, I mean, they're surfacing in our area, Merrimack Valley.
Yeah, they are more and more. I mean, up and down the North Shore, especially, they're very prominent. They do a lot of business there, and we're glad to have a presence now in the Merrimack Valley. You know, they're phenomenal to work with, from the underwriters all the way to the top. You can get a hold of everybody, you know, discuss the situation, and obviously work with the borrowers to make sure it's a smooth transaction for the most important investment of their life.
How would you say that your company is different? I mean, there's a lot of different mortgage companies, whether it be a bank or a company, but how do you differentiate yourself from others?
It's a great question, and you know what? There are a lot of different great companies out there. What separates us is, the difference I've noticed at least, is that we are very we're customer service oriented. And I know it's a cliche to say, but we are out there to treat everybody as if they were your own, how you would want to be treated. You know, our motto is, we put so many hours in the office that we spend more time with our coworkers and our family. So we want to make sure that we're surrounded by good people, and obviously that resonates in a better customer service to our clients.
Is somebody starting out new? I mean, I deal with it every day. You know, people saying, okay, I want to buy a house, or I want to sell my house. What would somebody do if they wanted to purchase a home? What's the first step they should take?
Yeah, that's a great question. Now, I also work with a lot of first-time home buyers or somebody new to it. And the most important thing is to educate them. We need to make sure they understand the entire process, and that starts out with financing. Obviously, if you're looking to purchase, you know, they contact you. The most important thing you need to know is, are you qualified, and what are you qualified for? But what's also important is, you want to make sure that the individuals are educated, that they're aware that it's not just about what your mortgage payment is. You also have to explain to them, being a homeowner, you have to look at, you know, the utilities. You have to look at what the cost of maintenance is in a property. And those are things that are important to make sure that everybody who walks through our doors understand that. It's not just about being able to make one payment. It's being able to comfortably live your life with your family, and also be able to make all of your payments comfortably. So education, you know, we want to make sure that the credit's extremely important, especially in today's banking world. So the first step, I would say, is, once they're educated, we pull their credit, look at their financials, and look at what type of goal they're trying to accomplish with purchasing a home.
Okay. And I think that's a good point. A lot of people will come to us, my company, with the agents in the office, and say, okay, I want to buy a $500,000 house. I mean, obviously, as agents, people know you need to get pre-approved first. And I think one thing that I would say that my company does, everybody in the office, they want to make sure that that person stays in their house and they don't over-purchase. So that's one thing that's really key, I think, in people understanding what's the cost of home ownership. And, you know, we don't want to see people coming back to us that they're going to be in a bad situation of a short sale or losing the home. The different types of loans, I think that's where it gets into people understanding that they can have more cash flow with certain loans versus others. So maybe if you talk about some of the FHA, the conventionals, and what's
Sure.
the differences.
Yeah, and I think that's important. It's again, identifying what the goal is of the individual, the family is purchasing the home. And, as far as cash flow, the most obvious but important thing is, you want to save, you want to have a down payment. You want to be able to then look at the different types of loans, like an FHA loan versus a conventional. What is the difference? An FHA loan is it's a federally insured loan. Conventional loans are not. The difference with FHAs is it's a smaller down payment. They have certain loan limits. They have different restrictions per counties on different loan limits, whereas conventionals don't necessarily. There's normal conventional loans, there's jumbo loans, which are another type of loan. FHAs allow gifts, conventionals usually do not. So it's the most important factor of that, and also besides the down payment factor of it, is looking at the actual amount of, once you get to the down payment, mortgage insurance. If you're not putting 20% down, you probably want to look at an FHA loan, because if you don't have the equity in your home, you're going to have to get what's called mortgage insurance. So you're better off going the FHA route in that event because it's cheaper than a conventional loan.
Now, again, I'm asking you as the expert.
Yes.
FHA loans, rates different, less than a conventional, or is it?
They're pretty close. The difference really, and I think people who don't understand the difference of what an FHA and a conventional is, they sometimes think, oh, you must not have the best credit to be with FHA because their restrictions are usually much more lenient than a conventional loan. But that's not true. An educated buyer who understands what it means to purchase a home and has a good loan officer is going to understand that with an FHA loan, you're probably better off because you're going to have lesser payments because the mortgage insurance part of it is going to be cheaper than a conventional loan.
With all the troops coming back, thank goodness.
Yes.
VA loans.
VA loans are huge too.
What would you say is the upside, the downside of a VA versus FHA versus conventional?
Yeah, the VA loans are great. They're government loans for, thank you for the troops out there coming back home safely. We're all glad for that. And grateful for everything you've done. And I think the good thing on the VA loans is that it's 100% financing. So,
Right. Which means that a lot of people, we know that language, but 100% financing
means no money down.
Right.
So it allows the borrower to be able to get into the home without having to put a down payment. So where FHA, the down payment minimum is 3.5%, on every 100,000, that's $3,500. So it's a big difference. Somebody spending a couple $100,000.
And I think it's great, like you said, with the veterans coming home, it's wonderful, but there's a downside to that for home sellers sometimes.
Yes.
Sometimes home sellers want to say, okay, I want you to put some money down.
They do.
Before they take their house off the market. But a good thing with that is that if they do put money down, they can get that back.
Correct. I mean, that is why you have to put a deposit down. So, and obviously, whenever you have a contract, you have to have a consideration. That's the deposit. So, where a seller looks at it from their perspective, well, they're not putting $10,000 down as their down payment. However, as you said, they can still put down a deposit, so it puts the seller at ease, knowing that if there's something that's not going to happen, that we're protected.
If somebody wanted to apply for a loan,
Yes.
maybe just go through the steps of, some people have gone through it, but some people are a little skittish of saying, okay, I have to get all this paperwork, and how can I navigate this? And it's real important. I know myself and agents in my office, when we're working with people, they were a little skittish about it. It's like, okay, I'm going to be asked all these questions. Well, yes, because we need to make sure your credit's sound. So kind of go through the steps of what people would go through.
Yeah, and I think the most important thing is you said people are skittish. We need full disclosure. You have to know everything up front. And if you know everything up front, it's going to make a smoother transaction for everybody. The first step would be to sit down with a customer. Once we identify their goal, we pull their credit. Once we look at their actual credit and see where they stand, we would then ask for them to fill out a loan application as well. The application consists of your address, your background as far as where you've lived, your job, what type of assets you have, because again, that goes back to the down payment because the down payment's going to depend on what loan program you're in. If you only have 3.5%, you're going FHA. If you have more, we can consider other options like conventionals. Or if you're a veteran, obviously a VA loan may be one that interests you. Once you have all of that information, you typically will request the financial documents. And you need 2 years of tax returns. You need bank statements, pay stubs. If somebody's self-employed, you're going to need profit and losses. If it's a corporation, you're going to need the business taxes. There's things you have to look on there as well. It's, you may identify something as it looks good, but if you don't look at the business corporation documents and see that the 1120s, depreciation's off, or they're not claiming a profit, that could also hurt them on the income. So all of that, when we say full disclosure, what I said previously, it's important. You need everything up front because it's going to help us do a better job, and it's going to help put you in a better position.
In terms of what's the credit score for somebody that's doing an FHA, what's the minimum for across the board to be able to get a loan?
620. 620 is the minimum across the board.
There's a lot of times people will come in and they may be at 600.
Yes.
So what kinds of things are you able to guide them in correcting or repairing their credit?
Absolutely.
To get to a point of...
And that's important because I think a lot of times people, if their credit's off, they get discouraged, but I don't think you should be. There are things that we can do. Once we look at your credit, we can look at, well, what's causing this to go down? Is it things that haven't been paid recently? Or is it charge-offs, which means accounts that weren't paid and the lender wrote them off, so they're showing as an outstanding balance on your credit? So we're able to take a look at that. We're not, credit counselors by any means, but at least help guide them in the right direction, which in some cases maybe this is what is likely a good idea to do, or in other cases refer them to a credit counselor.
Right, right. In which, some people, like you said, they get discouraged, and it takes time. Some people may take another year to get their credit to where it should be. So
it does, and I think
that.
that's part of educating them. And once you go through that with them, you build a rapport and the trust. And I think it goes back to putting people in the best position, as you stated earlier. You don't want people to buy a house and then not stay in the house.
Right.
So I think if they know the steps on fixing their credit, then it also helps them realize this is what we have to do to keep our credit and things we need to do to stay in our home.
What's the most common type of loan that people are...
These days in our area, FHAs. The conventionals obviously as well are huge, but I'd say in our area the majority it's probably a good split between those two.
Let's talk about one of the changes that's happened in the mortgage industry in terms of...
Which one, Connie?
I know there's been a few. You tell me, but one that sticks out in my mind is multifamilies.
Oh, yeah.
In terms of the percentage down and
you went from the 5 or 10% down to just about 20% across the board. We have some investors still doing 15%, but I mean, by the time we leave here today, that could also change to 20%. Correct. So it's a huge difference, and that's these investors sometimes tighten up their guidelines, and this is one that they have.
It's a big change if you
Huge.
don't go FHA.
Huge.
If a house cannot, and we see a lot of different homes, some homes can go FHA, which means they look at it more stringent upon the peeling paint and roofs and so forth. If a house cannot go that, you'd have to go with not a 5% down anymore, it's a 15 to 20%, and that's owner occupant.
Correct.
That's not an investor.
No.
So that, has really made a change in what needs to happen with certain homes, that they need to get them up to snuff so that they could go FHA. But that's one thing that I've seen a big change in the industry, and I think a lot of people aren't even aware of it.
No, they're not aware. It's huge, and you said it. If the property itself, one of the FHA guidelines is the inspection of the property. And that's not talking home inspections. When they come out to appraise it, they send out an inspector on it, and they take a look. If there's, like you said, the chipped paint, the ceiling's not right, the siding, they're going to make you repair that. Or it may not qualify. Right. So if it doesn't go FHA, you're going to have to come up with that difference, which, on a couple $100,000 is a huge amount of money.
Okay. What types of programs does New Fed offer? I mean, I know we talked about probably 4 different types of loans, but I'm sure there's different.
There's 203K loans. What a 203K loan is, it's a rehab loan. There is mass housing, which is great. I'm still getting familiar with that. It's another 100% type of program as well. Jumbo, we do some commercial lending as well. Those are just some of the few I can rattle off, that I've done most recently.
Yeah, the 203K is a great one. Again, I think that will help overcome that 15 to 20% in a multifamily. If a house needs some repair, you could always turn it into a 203K.
Yep, you can.
yeah.
It's, in that property, if it's not going to pass FHA, the borrower does not have the money, that's one option they can look into to see, and they would get that rehab money as part of their loan.
Are there certain programs for first-time home buyers?
First-time home buyers, and I think it's people out there think that if I'm a first-time home buyer,
Right,
I'm going to get the best deal out there.
right.
And you and I both know it's more of a marketing thing than it is rates. You're not going to get a better rate. The better rate you'll get is if you get an FHA home and it's your first-time home buyer. You can have the 3.5%. You don't own another FHA loan. So that's the difference. If you have multiple properties, and you can only have one FHA loan at a time. So if you already
Good
own,
point. A lot of people don't
Yep.
realize that when you're working with them, and it's like, wait a minute,
Yep.
we already have one. You can't have another one.
so the difference is if you are a first-time home buyer and the home qualifies for an FHA post the inspection, you get that 3.5% down payment. If you already have an FHA loan, you would have to go conventional. So other than that, as far as differences, at this point, there's really not. There are in certain cities in our area, not in Methuen that I know of, that there is the first-time home buyers down payment assistance. But other than that, general banking and with lenders, there's not a difference. You're not going to get a better rate.
Obviously selling real estate, we know the time frame there is on purchasing a house. What would you say your time frame is from somebody putting in an offer to commitment to closing with the bank? We know we use a certain parameter that we fall within, but every bank's different in terms of what they can do from time of offer, commitment to close.
And that's a great question, and I think every bank varies on that aspect. What we have is, for example, if you're doing an FHA loan, we can underwrite that in-house. So the turn time on that is 14 days, approximately, to close, if we get a complete file. On a conventional loan, that's not, I would say, you're looking at 30